Hey everybody, welcome. I'm going to go over NQ today, post-trade analysis. This is going to be my analysis of what happened in the market today. I was very profitable today. I am very thankful. This is going to be a great end to the week. I wanted to show you how I visualize the market, how I read the market as it's going on, where you could have taken a trade, and then I'll show you like the concept of how I look for a trade, what I need to see getting leading into a trading opportunity, and then where I target for my like end game, or at least where do I protect myself, right? So in trading, the biggest thing is we want to get in at a safe spot. We also want to manage the trade and get out at a safe spot, right? We don't want to enter a trade and then have to hold through a whole bunch of drawdown and work through all of our emotions. We want to just be in the market, reading the market properly, go with the flow, in, out, be happy with the profits or the opportunities that we took, and move on to the next day. Right? There's opportunities every single day, so I just want to just reiterate that over and over and over. You just got to stay patient, right? So overall, we can look at one time frame. We don't need multiple time frames. This is not going to be some like magic explanation of, oh, you look at the 1 minute, then you go to the 5 minute, then the 15, the 4 hour, then the daily time frame, then we look at the moon alignment, and then we look at the, it's nothing like that. It's like you look at the movements, you watch how price is moving from cheap or expensive, right? You see where the price is going, where it might be manipulative, right? So more or less like, all right, well, if I was the big player in the market and I wanted to buy as much as I could down at the lowest price possible, right? But I wanted to take price up to the most expensive area up here, right? If I had $1 billion and I bought $1 billion at one time, the market would just skyrocket, right? It wouldn't actually get me in at this specific type or this specific price, right? So I need to layer my orders in. So as I'm getting into the market, right? It's playing around. I'm getting it a little bit, right? I start to put on the gas, and then everyone says, "Okay, now we're going up right here." I'm like, "Okay, well now we're getting a little bit further away from my area that I wanted to accumulate, so I'm just gonna let off the gas a little bit, right? Maybe spike a little bit, push price up, play around a little bit, and then all of a sudden we're gonna keep going, and oh look, we do the same things, and we start getting out of our position, right? We're in profit, the market starts doing a nice little move, we're out of the market, and everybody and their dog, right, sees these big movements and they get in. And then price stops them out. And then it goes up again and they get in, price stops them out. They get in, stop out. And then all of a sudden, when the price is here, right, they don't want to get in on the pullback when price is at a better opportunity to make money, right? They don't want to get in because it's going against them and it's risky. And if you think of like any stock market crash, right, when is the best time to get into the market, right? When there's what? Panic, right? Or another word for panic is fear, right? And then what happens when the market becomes most expensive and everyone and their dog is getting in here, right? What do we call it? Well, we call that greed, right? Fear, greed, panic, greed. It's all how the market manipulates psychology, right? Because the market is not necessarily saying like, "Hey, I want this price and I'll exit up here," and it's going to tell everybody. No, it's going to do what it needs to do to get where it needs to go, but it has to go there in a very, methodical way. But there are patterns that occur over and over and over, and they have to form for the larger players to actually make money. And so, right, if you can identify those movements, right, they happen everywhere. Whether you want to look at the Nasdaq like I trade, whether you want to do Euro USD or Bitcoin or any chart that you want to look at, it's going to work because that's how money moves, right? So today, very clean. Yesterday, no, it was the day prior. I was thinking, okay, this is going to be Wednesday. I was like, yeah, we started pushing up. rounded off, I was like, oh yeah, we're going down. Like, this is beautiful. I said it to my Telegram. I said, hey guys, it's going down. I'm looking for shorts the next day, right? I trade in New York, so New York is going to be the blue, and so New York opens and just plummets. Right? I was on the money. It was great. Today, price dropped to the downside. I said to myself, I want to wait for something further to get created. Right? Price pushed down, pulled back up a little bit. You know, this big move here draws attention. Right? This is something where a lot of people and a lot of traders see. So when prices pushes up here, a lot of people say it's going higher. It needs to go higher. Let's get in. And they do something like this, and then they lose all their money. But they were right on the direction. They were just early, right? So when you're trading, you want to say, hey, a move happens in the market, right? If this move happens in the market, what do I need to see? I need to see something else. I need to wait further, right? Give me more. Something else should be occurring, right? This trading opportunity never showed it to me, so I never got in. I was actually looking for shorts, right? So price played around. I shorted about here. I captured something like this movement, right? On my Instagram, you can see it. This is going to be the move that I posted in my stories. It might be down by now, but this is the move I saw today. And then on the way up, right, here is my next entry, and my target was something like this, right? I targeted something logical to the left. I allowed price to breathe. Beautiful trades. The next opportunity bounced, right? Played around a little bit, and I believe I got in here, right? Took this move. There was also, I took a quick scalp on this short, and then I believe I held this long here, right? So it was just an absolute wonderful day. I traded a little bit longer than I should have, but at the same time, I saw the opportunities and I wanted to take advantage of them. So I'm not necessarily staring at the charts all day. What I'm doing is I come to the charts, I see if there's an opportunity going to be able to present itself, and then maybe I'll set alerts, right? Or I just miss the trade and I go about my business. I come back to the charts. I see what's going on. Maybe I go to my other screen. I'm messaging people doing something, and then when something goes off, an alert, I say, okay, here's my opportunity, right? I wait for further confidence and confluence to get into intelligent trades. Today they just ran. It was beautiful. Right? So if you think about this, if you say, hey, the buyers down here thought it was cheap. The sellers up here thought it was expensive. If we have a hold and price breaks both of those nice, beautiful levels here, right? Who's in control of the market? Well, you say the sellers, right? Because they pushed lower than the buyers made these ranges here, right? Buyers and sellers kind of like battled, right? Price pushes down. When price pushes up here, it's giving us a better opportunity to sell, right? Because that's the side of the market. The trend is down. So I'm just saying, hey, I'm looking for shorts. It's the safest thing, but I'm not shorting on a massive push like this. I'm waiting for further confirmation. Price played around a little bit, right? Did what I wanted it to see, or did what I wanted to see here, right? Nice little sweep, big impulsive move. A lot of people short here on the same idea. Big movement causes attention, right? These big moves cause people to have attention or start playing into their emotions, right? Just like a big move like this. Massive move, one candle. Don't expect it to play forward. I expect some sort of reaction. And then if it wants to carry through like it does, perfect, take advantage of it. But these traders here get stopped out. They lose their money. Price comes up, plays around a little bit. We got a really nice V-shaped move here, right? Price sweeps the high, pushes down, retests the high with a very aggressive candle here. It's a little bit, it's harder to see when you're like zoomed out like this, but you can see this is quite a large candle. It approaches the sellers that were within this wick, and then we have the sellers come back. A little bit of play around on a lower time frame. This is when order flow is just absolutely the cleanest you could take. So I took the trade, very tight stop loss, and I just allowed this trade to run because the sellers got a better price, right? Sellers got a better price, right? So if the sellers want to continue their reign and their momentum to the downside, right, we should see some commitment. Well, we saw some commitment. We broke a lot of these levels here, but this level where the buyers stepped in, right, we push down and then immediately come back. But are we coming back with strength, or are we coming back kind of like trickling, right? This move, look at the aggression. Look at the aggression. What that shows me is, hey, the sellers here pushed price down, they got a better price, but then the buyers are stepping in. So this goes back into my pattern. That happens all the time. If sellers don't commit, right, they're showing weakness. We want to wait for something to happen to get into a long trade. Price pushes up, plays around a little bit, right, gives us a nice little entry here, and I allowed the trade to run. But what I did was the sellers here push price down. Price came up, sellers push price down, they fake, right? There's no commitment to the downside. So this trade was exited quite nicely, right? I saved myself a nice little loss if I would have held it, but obviously I would have broken even just to, that's going back into my rule set. But because the sellers here are showing weakness, I'm not only looking for this level to get taken out. I'm saying like, hey, the sellers just, they're not here. If they come back in, I'll protect myself. But this trade, right? Enter, sellers, and then let's see what happens. The sellers were here, buyers come in, sellers to flip to buyers, price comes back, and this is where you get all these different traders that come into the market and they go, I'm a break and retest trader. Oh, I'm a supply and demand flip trader. I'm an order block SMC trader. I'm a fair value gap trader. I'm a algorithmic trader. I'm a whatever the case may be, structure trader. It doesn't really matter. But you can see, hey, buyers push in pretty aggressively. Price comes back. I am not looking to buy the market as it's falling. Why would you do that, right? Why, if somebody was going to drop a knife, what, are you going to hold the knife? Or are you going to try to catch it by the blade? No. You want to wait for the knife to hit the ground, flatten out, and then grab it, and then you have it, right? You want to be safe, very safe and cautious. So I'm not entering on the way down. Price plays around, gives me what I want to. Beautiful trade, sets up, and the sellers did not commit, didn't break anything significant. We got a nice fold over, a nice entry. Sellers are here. Let's flip the sellers. This is a beautiful trade. Here's a 100-point trade, right? It's possible. And this is on the 1 minute, right? Imagine if you were trading this exact same style, but you were doing like the 4 hour or the 1 hour, the 15 minute, right? Your average trade's going to go, 100, 200, 300 points, right? Price pushes up. Okay. Hold. Okay. Push up. Yep. Entry. Beautiful entry. Sellers are non-existent. Right? All right. There's an entry. Here's a 35 point trade. 35 points, one contract. That's 700 bucks. Right? It's an easy trade. You trade this with, say, 5 contracts. And you just multiplied it by 5. You do 20 accounts, right? That's a big number. And that's just reading the market in just a very logical way on one time frame, being patient for your entries, taking entries after you see what you need to see, targeting liquidity areas where it's just logical that price wants to go there because you have non-committed sellers or buyers. Right? Allow the trades to run. We can look to the left and look to the past for information, for clues, because here's another key. I'm just going to give you this. This is a big tip. Go and test this on your own. If you're an order block trader, or go research order blocks on YouTube, if price pushes up like this, pushes down, and then pushes up, more than not, you're going to have pivot points. It's going to look something like this. This is just how the market moves, right? You have the overall trend, which is just a better picture of the pivot points, but then you're going to have a little bit zoomed in and have micro pivot points that move from highs to lows. But if you look at if we look at this right here and you just draw out the pivot points, right? Very, very basic, very clear. This is where you can get SMC traders. This is where you can get ICT traders. This is where you can get every type of trader and their dog coming in the market and saying, I know how the market moves. This is the beautiful opportunity. But can they actually take advantage of this over and over and over? Look at this. Buyers come in, sellers, buyers flip the sellers, right? You have an order block, which is a sell to buy movement. A sell to buy movement is an engulfing pattern. Sell to buy, engulfing, sell to buy. When price makes a sell to buy movement, price will inevitably break one of the sell to buys or multiple, right? There's information that you can glean from that. But a lot of the time, the price will come down and retest a prior sell to buy, have a reaction, cause the failure of that reaction. You can expect the zone to fail. There is another reaction to a zone, right? The reaction fails, the zone is most likely going to fail. We have a reaction to the zone that flips the orders. Price then pushes up because we reacted to a previous buy to sell now, right? Not a sell to buy, a buy to sell, because price pushes up and then heads down further than the buyer, right? Reaction, failure, zone failure. Reaction, failure, zone failure. Reaction of extreme, trap, flip, reaction, failure. Right? Just watching this, just drawing this out over and over in the market will give you so much insight. Let's just go to Bitcoin just for, fun. I don't know. Let's just 1 hour time frame. Okay, let's see this here, right? I hope you can already see what I'm going to be drawing. Okay, you have a push up, down, and you can see sell to buy, sell to buy, sell to buy, buy to sell, buy to sell, buy to sell, right? What are we reacting from these pivots? Well, sell to buy is giving us a reaction. The reaction then fails and the zone fails. We have a buy to sell, but now look, we're reacting off of a previous zone. We have a push up, price then reacts, fails, reaction fails, or the zone fails. Then sell to buy, another reaction, fold over. The reaction fails to hold price higher. The zone fails, right? So if I was going to say, hey, from this point here, we're bearish. The opportunity that you have in the market, sorry, it was on my face there for a second. I'm still getting used to my face being on the left. If I give you that opportunity and I said, hey, for the longest time, we're just going to be looking for shorts, right? If you just put a trade on, say if it was a 2 to 1, something like this. And I said, hey, take a trade 2 to 1, right? In the best areas possible that you know how to currently trade. If you put a trade on here, right, more than not, you're going to hit your take profit all the way down, right? You just need to be aware of the direction, and the trend is your friend. The trend is the key in everything you do in trading. If you don't have a direction, if you do not have a direction, a clearly defined direction, do not go to step number 2. Number 2 is going to be a trigger. Clearly defined trigger, right? You wait for what you need to see to then take a trade. Once you're in the trade, you want to manage the trade, right? MNG, I just put manage. Manage the trade. You want to manage the trade, right? We want to be professionals. We don't want to just take a trade and then just walk away from the screen, right? We need to take a trade, right? We need to adjust how we take the trades, or where we're taking the trades, or where we're targeting, because not every single trade is going to be a 2R trade, right? There's a difference between dynamic and variable trades. If you're just doing a 2R trade with say for this example here, we got $582 by 287, right? It's almost a 2-to-1. But if you just did this same size trade in the market, sometimes it's going to work, sometimes it's not. But the idea of the trade, the trend, the things that I'm educating you on is going to work. You just need to adapt and flow, right? You need to flow, because every single day is not like the day prior. You might have a holiday. You might have Christmas time, right, where there's lower volume traded. Well, this Christmas wasn't, but last Christmas, right, the first week of December is usually a little bit lower, right? There's seasonalities with trading. And so as you're taking trades, you just got to approach the market in the most professional way you can. All right? It all works out the exact same all the damn time, right? You just need to find the opportunities that fit your rules and trade them over and over. On the way down, we can take shorts. On the way up, we can take longs. On the way down, we can take shorts, right? This whole thing here, this whole leg here, right, I'd be looking for shorts. It's clear. Right here, start looking for longs. Then we flip, look for shorts all this way here, right? There's all rule based. This is all rule based. I'm on the 1 hour time frame. If you took a trade here, right, just say for fun, if you took a trade here and you were like, hey, I'm just gonna, willy-nilly take a trade here and I'm just gonna go here. 3R for this trade, which means if you're risking $1,000, so you're entering between these two colors, right? If price goes up and hits this upper red line here, you're out and you lost $1,000, right? That's your risk. It's a set risk. But this is a 3 times your risk, so it's a 3R trade. Now the take profit is $3,000. If I said, hey, what I want you to do is find one good trading opportunity per month that gives you between $3,000 and $4,000, right? How often could you do that compared to if I said, hey, come to the market and try to find a trade opportunity that gives you $3,000 a day, right? It's about the trading, but it's also about psychology. And a lot of people rush trading, right? Which messes you up. A lot of people are undercapitalized. I've said it before, I'm going to say it again, right? If you tried to make $1,000 with only $1,000 in the bank, it's pretty hard. You need to make 100% on your return. If I said, I want you to make $1,000, but I said, here's $1 million cash, the chance of you making $1,000 on that $1 million is exponentially more probable than if you only had $1,000, because the ratio is different. So it's not necessarily saying like, hey, you just don't know how to trade. It's like, no, you might know how to trade, but you just might be way undercapitalized. So then the market and the prop firms and all this everybody is just like compounding all this information into your head that you should be making more money than you should be, or than you are. And it's just, it's just a vicious cycle. So you just want to make sure that you're in a clear headspace, trade appropriately, find a strategy that works. If I teach you anything and you follow what I do, great. I have a course coming up here. It'll be launched, I don't know exactly when. I'm trying to launch it within like a month from now, so like going into February of this 2026. And so I hope that you join me. I hope that you join others. I've already had quite a lot of test students, friends and students in the past that have stuck with me, and they're showing progress, right? So I hope you join us, and I hope you trade safe, trade smart, have a great weekend, and peace.